what's going on, everybody? Thanks for tuning in to this week's Productive Agent Podcast. My name is Tony Reese. I'm the founder and host of the Productive Agent Podcast and Facebook group. Today, I'm joined by a good friend of mine and loan officer here in San Antonio, Texas with Thrive Mortgage. Please help me welcome Mr. Eddie Hernandez.
Hey, thanks for having me on.
Yeah, absolutely, man. So, Eddie, tell us a little bit about your real estate resume. How'd you get started in real estate?
So I started in the apartment industry a while back, but I don't know if you'd consider the apartment industry real estate per se. They're kind of two separate things. But that's how I started. So if you got a moment, I'll tell you kind of how it went.
I love stories. Let's hear it.
So I was in the apartment industry, and one of my old maintenance employees from another company, I had just left that company. I went to this new company because they were paying me more money, whatever the case. He texted me and he said, "Hey, my wife is looking for someone to do some marketing for her." Okay. And the way he said it, I thought it was like a part-time job. And I was like, yeah, sure. Like, is this a weekend thing? Like, I'll make some extra cash. Yeah. Let me just hear about it. And he didn't really elaborate much. He just said, my wife is looking for someone that can talk to people and do some extra marketing, yada, yada. So, okay, cool.
Seems kind of odd. Yeah, it's like, what is this job exactly?
And I had, it was kind of like when you read an ad in the newspaper and it's like, make 5 figures, or whatever, right. Make 6 figures. Yeah. And so I was like, yeah, sure. Like, I'll take a phone call, whatever. And so a couple days went by and I got a phone call from this lady, Jill, and she was talking to me about the position. And I said, look, I work out in New Braunfels and I can meet with you. I didn't realize that there was going to be like this whole interview for this thing.
Right.
And I said, can we meet somewhere kind of close by? Like, I really can't leave and come back. I can't do a whole 3-hour thing, especially like interviewing for another position. She said, I'll come up to you. We'll go to a Starbucks or something. We'll meet there. Cool.
Wait a second. So let me clarify. You're in apartment locating at this time.
So I was the property manager.
Yeah.
So I was the property manager. I oversaw the whole property.
And then you got this call.
And I got this call. And again, I thought it was just some part-time stuff. Yeah. And so anyways, I'll meet with you. Like, we'll go have coffee. I'll talk to you. And so we're sitting there and she's kind of talking to me about the position. And at some point I realized, wait a minute, this is a full-time position. She goes, oh yeah. Like, you would have to leave your job and to come do this. I had never heard of a title company I did, but the only thing I knew about a title company is that they're the ones that I signed my papers at. Yeah. I knew nothing about a title company. So there was this whole career change thought that went through my head, and immediately I was like, oh, like, I don't know. Like, I'm sorry, I misunderstood. I didn't realize that it was a full-time job.
Right.
And she was like, no, I think you'd be perfect for this. And I was like, look, I've got a career path. Like, I'm going to be a regional manager.
Right.
I'm going to retire in the apartment industry. And this was, what has it been now? 8 years, maybe a little longer. And so I had a path. And so this was presented to me. And so then I said, you know what? Let me talk to my wife about it. And we'll go from there. Yeah. Let me talk to my wife. And so we went home and I was kind of talking to her. I was like, look, this is kind of the position that you have to get referred to. Like, you don't see this job posted. It was for business development rep, which I'm sure everyone knows what a business development is for a title company. I said, I feel like this is an opportunity for me to try this out. And I don't get to apply for this job ever again because I was referred. I may never get this chance again. And I said, but I'm really good at what I do in the apartment industry. Right. Anyone will hire me. In fact, they're always trying to poach me. I was like, if it doesn't work out, I'll just come right back. Right?
Sure.
No big deal. Yeah. So, and I'll try to shorten the story. So
no, it's all good. It's a good story.
So then I called Jill back and I'm like, you know what? I'm kind of interested. I like the sound of it. I need to know more. She said, well, my VP, my vice president is going to want to talk to you, and the president is going to want to talk to you of the company. And I was like, oh, okay. Like, it's that serious. Like, y'all take hiring seriously, I guess.
Right.
It was a smaller company at the time. It was called Trinity Title, now Old Republic Title.
Okay.
And so they came up to New Braunfels to meet me. This was the owner of the company and the VP. And we were having coffee, and the way he was describing it to me, it seemed too good to be true. You know, you're going to wine and dine clients. You're going to entertain them.
Right.
You'll make more money than you're making now if you're good. And I was like, I'm going to make more money. I'm going to be doing fun stuff.
Right.
Like no owner's reports, no toilets, no termites, no residents and evictions. And I was like that. And I told him, I said, honestly, I feel like I'm being like sold here. And when I get there, it's not going to be what you're telling me. And so I told the president at the time, Dale, I'm sure people know who Dale is. I said, if you're not being honest with me, you're going to disrupt a family. Because if I leave this position, I'm in a really good place now, and I don't make the money that you're telling me I can make, it's going to disrupt my family, and I'm going to have to, granted I'll get back to where I am now, but I'm going to have to work back at it. And so he said, I'm not lying to you, and I can tell you you're going to do great. And right there and then I said, you know what? I'll take a chance. I'll take your job. And so that's how I got into title.
Okay.
And it was because my maintenance guy, he was a lead maintenance, this guy Eric, his wife Gloria Campos out of Old Republic Title, was looking for someone. He said, I think you would like this guy. And so then I got into title, and I was in title for probably about 5 years. Left Old Republic Title to open up Succession Title. Started there at Succession. That ran its course. And I left title to become a lender, mainly because, and no offense to anyone in the title industry or anything, I like to work. I like to work around the clock. If someone calls me and it's something simple I can do and only it's going to take a couple minutes out of my day, I want to be able to help them. And so, that's my logo, my no days off.
No days off.
And we can talk about that later. I take time off, but
sure.
There's always something, a phone call, a text message, an email. And so I was like, you know what? Title's not serving me anymore. I want something different. What could I do? And we were actually driving to a campsite when the idea came to me. And I told my wife, I was like, I'm going to leave title. And she was like, well, just calm down.
Yeah.
Let's think about it. And I was like, no, I'm telling you, like, I'm not in it anymore. Like, just from 1 second to the next, it happened.
Yeah.
And I said, I don't know what I'm going to do, but I'm going to do something in real estate. And so I was like, well, maybe I could be a real estate agent. And I was like, man, I got to compete against all these other real estate agents.
Yeah.
Can I do well? Sure, I'll figure it out. I'll find someone. I'll find an agent that produces. I'll be on their team. I'll learn, and then I'll branch off and do my own thing. And I was like, well, my little girl still wants to spend time with mom and dad. I don't want to be off. I don't want to be working Saturday and Sunday where I have to leave them to go do my work.
Right.
And so I was like, well, I don't know if I want to do real estate as an agent. So what about being a lender? I know I work from my laptop. I know I can work from anywhere, I think, based on some of the people that I know.
Right.
I said, you know what? I think I want to be a lender. And so then I talked to a couple people in the mortgage industry, and I decided overnight I'm going to be a lender. I had actually put my notice in at Succession before I even bought my classes to be a lender. I put my 2-week notice in. That's how sure I was.
How long are the classes? I heard they're pretty brutal to become a lender. The test is brutal.
It's 24 hours total, and it's a legit 24 hours.
Okay.
Like you have, like I was like, okay, it's
talking about classes.
So it's 24 class hours.
Yeah.
And it's 24 hours total.
Okay.
I thought maybe you could like skip through videos and just kind of
That's
like compress it.
significantly less than a real estate agent.
Yeah. So it's 24 hours. I think it's 21. And then there's 3 hours of like state courses you have to do or whatever.
Okay.
But and so anyway, so I put my notice in, and Mandy says, do you have your license already? And I said, no. And she's like, well, are you sure you want to put your notice in if you don't have your license? And I was like, yeah, I'll get my license, no problem. And I was pretty confident. And so I signed up for my courses, and I was still doing, my 9 to 5 at Title. And so I'd go to work, I'd come home, and I would just start my courses as soon as I got home. And my wife can attest to this. As soon as I walk in, all right, honey, she'd bring me food, and I would just be watching my stuff. And so I did the classes in 3 days, 8, 16, 24. I just came home and worked till 2 o'clock in the morning or something. Not worked, but watched these stupid videos.
Right.
And so you finish the courses and you get your certificate. That's easy.
Mm-hmm.
They give you a little quiz after and you get your certificate. But then you have to take the test, the state exam. So once you finish the courses, you can register for the state exam.
Right.
And so as luck would have it, the state exam there was one coming up right after I finished my courses. So from start to finish, it was like 18 days from buying the courses to taking my test. And a loan officer told me, he's like, if you do it fast, you can get your license in a month.
Right.
And I was like, well, I have like 2 weeks. And he's like, yeah, I don't think you could do it in 2 weeks. And I was like, well, I have to. I kind of don't have an option.
Yeah.
And he said, well, all right, well then, good luck, right?
Get to work.
Yeah. So took my tests. Took my classes. And then you can take a practice exam. And the practice exam is just an old exam.
Right.
And so it took 2.5 hours for each one. Okay. And I took 22 practice exams. Ooh. 22 until I could get an 85 consistently.
Right.
Which I think you have to score an 85.
Yeah.
Until I can get it consistently, I kept taking tests. And so it was like 68, 72, 75, 80. And then it was like 85, 87, 85, 87. And I was like, okay, yeah, I feel good about it.
Right.
And I scheduled my test. We actually went to Vegas. We were going to Vegas the weekend after I took days after. Yeah. I think I took it on a Saturday and maybe we were leaving, or maybe a Friday. I don't remember what day it was, but we were going to Vegas right after. And I remember feeling like if I don't pass this test, there's no way I'm going to enjoy my time in Vegas.
Right. Yeah.
And so, I took my practice test 22 times. I went, and you go to one of those ones where they like you have to sit in a room with everyone else taking tests and whatnot. Yeah. And you take your little tests on the course there. And so I passed and actually cried in the parking lot because I was like so relieved, because I was like, man, and if you don't pass the first time, you can take it again in 30 days. If you don't pass the second time, I think it's 6 months.
Oh, wow.
So I was like, I literally can't afford to not pass this thing.
Right. Yeah.
And so I passed it, and from there, hit the ground running. So yeah, that's how I got into being a lender. Yeah.
It all started with a maintenance guy recommending.
Yes.
That's pretty wild. Yeah.
It all started there, and taking a chance. Yeah. I knew nothing about title. I even knew no one in the real estate industry. I knew a few people that were agents, but they already had business development reps when I started. I called them and they're like, hey man, I use Capital Title. And I'm like, oh crap. Yeah. Okay. And so, that's how I got started in real estate, I guess, and how I ended up here. And I think this is where I'll probably hang my hat for a good while.
That's awesome, man. That's a great story. Thanks for sharing. Yeah. How long have you been on the lending side of things?
So 2 years and let's say like almost 2.5 years. Yeah. Just under 2.5 years.
Okay, cool. Yeah. You've been crushing it. I see your numbers out there, and obviously we've done some work together, and we're working on some deals right now together. So thanks for sharing that. Yeah. Take us back just a little bit further. What did you do before real estate? Tell us where you're from. Give us a little bit of background.
So born and raised in San Antonio. I call it the West Side. I don't know if anyone else would call it the West Side, but I call it the West Side. Okay. 36 Culebra, like right by St. Mary's University. Yeah. And so I grew up here in San Antonio for the most part. Always lived in that general area. Yeah. Went to school at Thomas Jefferson. Yeah. Graduated high school at Jefferson. Really pretty school, by the way.
Yeah, it really is.
I didn't realize how nice it was until I left Jefferson for my freshman year and went to Poteet for my sophomore year. And then I was like, oh, that's why they say Thomas Jefferson's so like nice inside. And I was like, I didn't realize that other schools looked like this. Right. High schools. But yeah, so I went to Jefferson and didn't do much college. College just wasn't for me. I did a semester at probably Palo Alto or SAC or something. Can't remember. Sure. And then I went straight to work. And every job that I've held has allowed me to do good as a lender. I've had a lot of them. I like to call them experiences rather than jobs, because there's been a lot, but they all added to what I do. Like I did telemarketing for a long time. I'm sure everyone if you live in San Antonio, you know, West Telemarketing, especially like if you're around my age, you know, that was one of the first jobs that paid more than like Jack in the Box or McDonald's or whatever.
Yeah.
But everyone hated it, and they would hire you on the spot. You literally just had to fill out an app and then introduce yourself, and they're like, "You start Saturday." It was that easy.
What the heck is? I've never. What I mean,
telemarketing has gone away almost.
People call you on the phone.
I used to smile and dial, and so to kind of date myself, we were selling one of the like specific products. And what is even? Well, I guess we were selling it. It was AOL Internet Explorer Accelerator. So it was a CD-ROM that we would mail out to you, and you would put it on your computer. It probably did nothing, but it was $29, and then if you didn't like it, you could just mail it back to us. And I sold so many where the average person on the floor didn't sell anything, because they were they just weren't good at it, and I got really good at it. It was more of a game to me than anything, and so telemarketing, I did that for a long time, and that got me really good on the phone. I was able to learn that I could use voice inflection, tonality, pace. I could use all these things to keep people on the phone with me, and make more sales. Yeah. And I was like, well, you sound like a robot. You legitimately sound like a robot. Hi, this is so-and-so. You're reading the screen. I have learned the script.
Right.
And now I'm talking to the people.
Right.
And when they're high energy, I'm high energy. When they're low energy, I'm low energy. I'm mirroring them. Yeah. And so that's how I got good on the phone. And so that's why I can kill on the phone. Like, I'm great on the phone. I know when to use like bigger words with people. I know when not to use big words with people.
Sure.
And you just mirror them, and they feel comfortable, and you break down walls. And so that's one of the biggest skills. And then I did door-to-door sales for Time Warner Cable. That was a whole different type of thing. Now I'm in person, right? Getting run off and yelled at. That was interesting.
I'm sure you have plenty of stories there.
Yeah. I sold cars, which was a very hardcore sales. I did it back in 2002, 2000-ish, right in there. This was back before the internet. People would show up with their newspaper and show me their ads. And I'm dating myself big time.
That's crazy.
And it was a very like pressured sales. If you've seen any of the old school like sales movies and like sales tactics that they use, those are an exaggeration, but almost not. Like I have the ability to kind of press someone and be a little salesy when you need to sometimes. And so door-to-door sales, phone sales, telemarketing, car sales. I've done all the sales.
Sure.
And so I've taken bits and pieces from all of that, because as a loan officer, you're not really like, you are selling, but you're not trying to like hard close anyone.
Right.
But you do have to have sales skills, and just like a real estate agent, real estate agents need them too. So that was kind of my background. Yeah.
I like that a lot. I'm sure you're going to probably pass that along to your daughter at some point.
Oh yeah.
I've been talking to my daughter. She's going to be 15 this year. I'm like, one of the best jobs I ever had was waiting tables at Alamo Cafe. And you just learn like, you have this table and you have that table, all different types of people. Right. You have to communicate.
Of course.
You can't whisper. And
no.
Like, she's ordering. I'm like, speak up.
Yeah.
You got to speak up.
Yeah.
All super important skills.
Yeah. So we do it with my daughter quite a bit. Like, that's one thing when she's trying to like sell me on like, can she stay up later? And it's crazy, but I try not to stifle that because that's your natural sales ability.
Sure.
And I'm like, that will help you in life later.
Yeah.
Don't do it with me. You can try to sell other people on why you should be able to stay up later or do whatever you want. And I was like, but with me, it's kind of black and white. Right? Yeah. But I'm telling you, don't stop doing that. Okay.
Yeah. Well, cool. So tell us a little bit about this. I'm excited about this episode because this episode is going to talk about, working with real estate agents and what you can do to help grow their business and help their clients and customers. But it's also going to be a great episode to educate our customers, our clients, I didn't know that's how it works. So let's get into the meat of it, the mortgage side of things. Okay. Tell us a little bit about Thrive Mortgage. Why did you choose Thrive Mortgage to be with?
So the reason I went to Thrive, and because there's so many places that are local, what I call local lenders, local guys. The reason I went there is because I knew that just by taking the state test and the exam, there's going to be a lot, like I'm going to need help to
Sure.
start. I can learn fast, but I'm going to need help. And so ultimately I wanted somewhere where someone was going to invest their time into me. And I wanted someone that was going to be available till midnight while I'm learning, because until I'm comfortable, I was going to work every hour that I could and learn and consume mortgages until I was comfortable. And so, just kind of asking around. And so Drew over at the office I'm at now, he made a important statement to me. And he said, I don't do loans anymore. He used to do loans. He said, my only goal is to make sure that you're successful. And I'm going to be there to answer your questions and to help you as you're learning, and you're going to need that. And so that was one of the biggest factors is I was like his trainee. Like he invested all his time into teaching me or just answering my questions.
Right.
And so that was one of the biggest factors. The other thing is Drew's big on marketing. His background is in marketing. And so in Drew's office, he provided all of the like Thrive swag, like hats and koozies and they, cups that we do. And so at most offices, you don't get that stuff. You kind of have to buy it for yourself.
Sure.
Because it's like your own business.
Yeah.
No one is paying you an hourly wage. And so I wanted to, that was one of the other big things is Drew provides all of this stuff. And I had gone to several of his industry events. Like it's a Halloween event. He does quarterly events, if not more. And I was like, I can use all this stuff to help build my business. So
Sure.
As far as Thrive is concerned, most of the local places are pretty similar.
Yeah.
If you're talking about lenders in general, and I'm okay with saying other names, Gold Financial, Thrive Mortgage, any of the other local guys that everyone knows about, right?
Right.
I'm drawing a blank when it comes to their names.
Legacy Mutual.
Legacy Mutual.
Yeah.
Are there slight differences? Sure. But for the most part, we're all about the same. Thrive, I like Thrive because if it's not broken, don't try to fix it, right? Like I can talk to my underwriters. The process is super smooth. I don't have issues with closing loans late. And so I've talked to other lenders that have tried to recruit me. And I told them, look, what are you going to do? Pay me a little more? Is it worth the stress of me learning a new system? And it's not going to get better because it's already, I can't think of where we're lacking here.
Right.
So you're either going to be on par with Thrive and pay me a little more, which I'm not here for the money. Granted, I like making money, but that's not what it's all about. I want to have a good work-life balance. I want to be sure that my clients are taken care of. And so, why Thrive was mainly because of what Drew's office offered.
Sure.
In 5 years down the road, we may not be with Thrive. I don't know.
Yeah.
He may take his office, and if Thrive changes some stuff, and maybe we move to a different,
Well, y'all have some great events always going on, and I know Africa over there at the office is always hosting like trainings and different things going on. Yeah, I think y'all have an event this Thursday.
We do. We have an event. Admittedly, I don't know. I know it's at our office.
I saw it off the top. Oh, it was opening day.
So baseball. It's an MLB opening day. I know that much. We're gonna do hot dogs and hamburgers and whatnot. But that's one of the things. So I can invite my people out. Come hang out, and break bread with me. Be there at the office.
That's cool, man. So talk to us about clients and customers. Why should they go to a local lender rather than, I bank at Wells Fargo, or I bank at Frost, or I bank at all the big banks?
So when I get on a phone call with a client, and especially if they're like, I've already applied at Bank of America, or I've applied at Chase, or whoever, Wells Fargo, whoever it is. And I kind of wanted to get a second opinion. One of the first things I tell them is how's that experience going so far? I ask, and I know how the experience has gone. You submitted your application, and it's been 5 days, and maybe you got an email or two. Definitely, no one called to say like, "Hey, I'm going to be your loan officer.
Right.
This is my cell phone number. Call me evenings, weekends, nights, whenever you need me. I'm going to be there every step of the way." They didn't get that service. And so while I would love for everyone to do loans with me.
Right.
I think it's important that you choose a local lender, someone like myself that is going to all we do is loans. I don't do credit cards. I don't do bank accounts, savings accounts. I don't do none of that. I am just dedicated to you. And I don't work 9 to 5. At 5 o'clock, everyone at a bank does not have to take your phone call. And honestly, if you don't do a loan through them, they're salaried employees. If you don't do a loan, it's just less work for them.
This is so true, guys. I want to point this out and drive this point home. I've had clients, that have gone that route, even though I encourage them to check out local lenders, and they just like, no, we already got approved and all this. Yeah. It's so hard. Like I'm on the weekend, I'm like, hello, can anybody answer I need a pre-approval.
Yeah.
I need to submit this offer, and you can't get a hold of anybody.
No.
Good luck. Like it's just not going to happen.
And so that's one of it's the service that you're going to receive from a local lender.
Yeah.
The availability that you're going to have. Now, granted, there are some local lenders that are like 9 to 5 people.
Sure.
But more often than not, you're going to get really good service from a local lender.
Well, I'm going to toot your horn a little bit for a second. That sounded funny, but anyways. But, I see this guy on social media a lot, and he's out fishing, he's out camping, he's out doing all those things. He's truly living the work-life balance. But this guy will get on the phone and he'll bust out his computer. Like you said, I work from pretty much anywhere and everywhere. It's like, boom, 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 boom. Here you go. This is what you need. You know, and it's quick, and that's, I know coming from the real estate agent side of things, it's like, oh, that's so refreshing.
Yeah. Just to be able, and again, would I love it to be me? Sure. But find you a local guy that's going to help you through this process. Cause it's, I don't know where it ranks on buying a house, but I think it's like one of the top most stressful things that we do in our life. Mm-hmm. It might be second.
Yeah. It's pretty high.
And so if you can alleviate the stress of, are we pre-qualified? What are we pre-qualified up to? I think it was an FHA loan. I don't know. Let's call my guy at Wells. Well, it's Saturday and it's 3:00 and they closed at 2.
Yeah.
And he wasn't working Saturday anyway, so it doesn't matter. He'll get back to you on Monday. You're making a huge decision, and the last thing you want is like, no, we haven't gotten any offers, and you want to submit an offer, but you got to wait till Monday, and an offer comes in on Monday, and now you're competing. Now it's a multiple offer situation when you could have avoided that by going with someone local. So local guys are guys and gals. They're always going to give you better service in most cases, better service than your big banks. Are rates comparable? Sure. We're all pretty comparable. We're all pretty close. The biggest difference is going to be the service that I provide to the client. That's
I think this kind of goes into the next question here was, I get a lot of people who are like, oh, I want to shop rates. I want to shop, can you give me several different lenders I can talk to? And of course, being the fiduciary to the client,
sure.
I'm like, yeah, of course, this person, this person, this person, here you go. That's what you asked for.
Yeah.
But talk to us a little bit about like, that can be stressful.
So, and this is what I talk to agents that I do business with about. Like, look, if you're going to send someone to me or another lender, because you can have your main without like, I think I hear a lot from agents that, oh no, we have to recommend several. And I'm like, oh, I think you're kind of misunderstanding. The rule is you can't tell them they have to use this lender.
Sure.
You could say, this is my recommendation.
Right.
You're welcome to, shop whoever, right? They can go to Wells Fargo, they can go to Chase, they can go to Rocket or whoever it is. And so I tell them, look, you're not breaking any rules by recommending just one, because you're not saying you have to use them. Just say, hey, look, I've had good experiences. My clients use him often or use her often, whoever it is. And it can be very stressful. So when I have clients come to me and they've applied with 3 different lenders, they are so stressed out about, they're looking at 3 different loan estimates. There's fees on one, there's no fees on the other. For one, no one understands a loan estimate.
Yeah.
No one. And I have real estate agents that have been in the business for a long time and they still ask me questions about it. And so I tell them, look, don't feel bad about not understanding this.
Right.
Most people don't understand it. I've had people who have purchased several homes, 10 homes, and even them in their knowledge of I've bought several homes, mm-hmm. don't understand very much. A low amount of knowledge of this, even the ones that think they know a lot.
Right.
And so it can be very stressful, right? Looking at all these numbers and what's the difference, this and that. And then you've got, if it's not a local guy, it could be Rocket or something. They could be misquoting you. They could be quoting you on older rates. They could it could be someone who's devious and they're out of state, and they know that you can't walk into their office and have a conversation with them. So they fire off some lowball interest rate just to keep you around.
Yeah.
And it can be very stressful. And so what I tell my agents is, look, if they're going to be shopping several lenders, their experience is going to be horrible because it's just going to add stress to it. And when it comes down to it, and I was telling you earlier, when it comes down to it, the experience is what's going to keep that person coming back to you.
Yeah.
And so while you're selling them their first home and it's $225,000, eventually this person is going to get raises, their family is going to grow. Maybe they want to buy an investment property as they get a little older and they save up some money. They're going to think, man, that transaction with Tony wasn't so smooth. And it may not be your fault. It was one of the lenders.
Right.
Or it was just the fact that they had to choose between 3 lenders.
Right.
And so what was the original question? Should they shop?
Yeah. Should people shop around for multiple?
In my opinion, no.
Yeah.
Maybe I'm biased.
Right.
Can they find a better rate somewhere else? Possibly.
Yeah.
Maybe.
And going back to like, how much is that really going to save you?
Right.
Is it $18 a month? I think we quoted. Is that really worth the hassle of going back and forth?
The difference between, you're giving me 6.5, this other guy's giving me 6.375.
Right.
We're talking $18 a month, maybe 18, 20, 22, depends on certain factors.
Sure.
But right in there.
Yeah.
And while I get that, $18 a month will add up over time, in the grand scheme of things, I've had people lose their dream home because they were going back and forth and they wanted to use this other lender and they didn't get to make an offer on time, or some situation happened and it was all over $20 a month and or $100 fee that we were charging. I'm like, guys, this is something that you're going to be living in for the next 5, 7, 10, 30 years potentially, depending on where they're at in their home buying process. Is it worth it? And really stop to think about that, because I guarantee you, after you lose your first dream home, that $18 a month, you don't care about it.
Yeah.
You would have paid $50 a month to have that house.
Yep.
And so, but they almost have to get burned that first time to know, like, you know what, this is my guy. I'm going to stay with him. He's going to take care of me. And I try to alleviate that pain, but sometimes we can't. Sometimes we can't. They got to learn the hard way. I'm sure you've been down that road. So.
Yeah, same thing when we're doing like multiple offers, and it's like, hey, you got to be here, and they're like, no, we want to go in here, or whatever, and it's like, okay, you lost out on that one.
House, and they're like, no, call them back, tell them we'll give them twice that much. That's too late.
Yeah,
they're under contract. Yeah, it's the same thing.
Yeah, for sure.
Yeah.
So talk to us about the different loan programs and products: FHA, conventional, USDA, VA. Those are kind of the traditional ones that everybody goes towards. So what is the difference between FHA, conventional? Can you talk to us a little bit about that? Obviously the down payment difference, and obviously the mortgage insurance and stuff like that.
So I'll probably get blasted by some loan officers, but this is what I notice. This is what the consumer is going to notice. These are the basic differences. I'm not going to go into the guidelines.
We could be here all freaking night talking about all this stuff.
When I talk to a client about different loan types, and this is how I educate real estate agents that I do business with as well, we should not be talking about loan types until we've got an application and we've seen their situation. Because 99% of the time, there is one product that's the best product. For one reason, usually that one product is because it's the only one they qualify for. So this is the only product you can use to buy a house. Yeah. So it's the best product, right? By default. Yeah. Or if you qualify for a superior product, why would you take the inferior product? And so let's start with FHA. FHA is not a first-time home buyer's loan. It's been dubbed a first-time home buyer loan, but it's not. The reason that first-time home buyers end up going with FHA is because you can purchase more home. You can have a higher debt to income ratio. So you can purchase more home with more debts and lower income, basically. The entry to get in is less. It's 3.5% versus the higher price point of 5% on conventional. So most of your first time home buyers are they're just starting their careers, so they haven't progressed in their career. They haven't saved up a ton of money, and so 3.5% down payment and the higher allowance for debt to income ratio works best for them. And the entry level for credit on an FHA is easier as well. And so you can have a lower credit score, you can have less money saved up, and still be able to purchase a home. So that's why FHA works out for the first-time home buyer often.
Sure.
It doesn't have to be an FHA. And so FHA is a 3% down payment, 3.5%, I'm sorry, 3.5% payment. There is mortgage insurance on FHA. It recently got lowered to 0.55. It used to be 0.85. How that's calculated, I need my calculator on my computer. It doesn't necessarily matter to
Give
the
him a call.
consumer.
He'll go over it later. Yeah.
It doesn't matter to the consumer necessarily. They really just want to know their payment.
Yeah.
But an FHA loan will carry that MI for the life of the loan.
Right.
In some cases, they just changed it. If you put a certain percentage down, you might be able to get rid of that MI as time passes. Then you go to conventional. Conventional has a higher credit entry. Can you get approved for a conventional with the same score as an FHA? Sure. Your interest rate's going to be extremely high. You could just go to FHA at that point. There's a higher entry level. It's a little bit harder to get qualified for conventional. Down payment is now 5%. There is mortgage insurance, but once you've paid off 20% of the loan, your mortgage insurance will eventually fall off. And that usually, I think, is about 8 years, I think is what it takes. Somewhere in there, it's on all the documents when you purchase a home. It tells you kind of like where it'll fall off.
Yeah.
So that's your conventional loan. 5%, a little bit higher credit, lower debt to income ratio by about 7%. So you have to make more money to be able to purchase the same home on an FHA. So higher credit, you got to make a little bit more money in some cases. You got to have more saved up. So that is for the person that's buying their second home. Is it a better product? Sure, because MI is going to fall off. Your mortgage insurance is probably going to be lower if you have optimal credit. And so that's your conventional loan.
Well, another thing I've noticed recently in like the past couple of years, like they keep on bumping up the FHA loan amount.
Sure.
So like,
yeah.
at one point, I don't know the exact numbers, but let's just say it was,
it
was maxed out at 300. And now all of a sudden it's like, hey, it's bumped up to 350.
You can
hey, it's bumped up to 420. It's like
quite a bit.
Yeah. I forgot what it's pretty high.
I look every time. It's not one of the numbers that I like to memorize. I don't like it to occupy space in my brain because I can just go look and it'll tell me exactly what it is.
Yeah.
And so again, someone's gonna blast me for that and be like, "Oh, you should know the maximums." And I'm like, "It's not a huge deal, guys."
Yeah.
Most people doing FHA loans aren't purchasing in the upper end, so it's not important.
Right.
If it becomes important, then I'll start looking at conventional. We'll look at the higher loans.
Sure.
And whatnot.
Sure.
And so FHA, conventional, and again, anyone can get an FHA or a conventional loan. You just have to meet the qualifications for either. And again, one of these products is going to be the best product.
Sure.
If you qualify for a conventional loan and you have the means, I'm going to tell you to go conventional because FHA is not as good a product. Now, if your situation, if you don't have the down payment, I'm going to say, hey, let's go FHA. That's the best product for your situation. Let me tell you why.
Yeah.
And then there's VA. Obviously, VA is for our veterans.
Right.
Zero down payment. That's the one that consumers notice all the time. Is VA carries a zero down payment, better interest rates. In most cases, if you qualify for the VA loan, it's the best product. Very seldom would I recommend another product over a VA.
So isn't that and you just mentioned it, that the interest rates are usually a little bit lower for VA. Yeah. So that kind of balances out like, hey, you're not putting any money down. So obviously your mortgage, your loan is a higher amount.
Yeah.
But it kind of balances out, I guess.
Down payment is one of the worst ways to lower payment. I tell everyone all the time. They're like, well, what if we put another 10 grand down? And I'm like, okay, let's weigh our options.
Yeah.
10 grand is going to save you $70 a month. Or would you rather have 10 grand in the bank?
Right.
To do some repairs or just have a cushion, like an emergency fund. Heck, throw it in the stock market. I always suggest that.
Yeah.
Can you make $70 a month on your 10 grand? Maybe, right? I don't know.
Yeah.
But that's the conversation I have with them. And so with VA, you'll have a little bit lower interest rate. Yes, you're financing more, but negligible, 3.5%, 5% more.
Sure.
You're not going to notice it. $35.
Yeah, that's a good point.
Versus your down payment. So typically, and you can still put money down on a VA loan. I don't recommend it, but you can. Cash is always king. So I'm always like, unless you've got a strict budget and you have to meet that budget, you're doing some Dave Ramsey. Is it Dave Ramsey?
Yeah.
Type stuff, and you got to do it. Fine. That's fine with me. So yeah, the VA, what most consumers are going to notice is the low entry, right? No down payment. That's and it's a superior loan. It's a good loan. There's other factors to it. I'm not going to go into detail. Then there's USDA. So
I don't think I've done one yet.
So
I'm in my fourth year.
I have worked on probably 4 USDA loans.
Yeah.
And when I say worked on, I've never closed a USDA loan. Okay. And I am creeping up on
coming up on 3 years or so.
So I'm rounding 230, 250 some odd loans or so. Okay. And I've submitted 4. Okay. Submitted. Okay. So USDA amounts for probably less than 1%, at least of my loans. I'm sure there's someone out there that's like the USDA king or something. But I don't like a USDA loan for the real estate agent to talk about USDA because it's hard enough to find a house as it is. Okay.
It's out on the sticks typically.
Right. And so now you're saying, let's take a process that's super difficult and make it even harder. Okay.
Yeah.
You got to find a house that qualifies for USDA. Okay. USDA has a higher credit entry level than your FHA.
Okay.
And yes, you can get 0 down payment, but your debt to income ratio is even lower than conventional. So most of the time, people who want a USDA loan are first time home buyers because it's like, I'm not VA, but I can get USDA, and I can get 0 down payment. And I'm like, yeah. But we know a couple things about first-time home buyers. And this isn't to say anything bad about people who are younger or purchasing their first home.
I think we've all been there.
Yeah, right. I was that person.
Yeah.
We make less money.
Yeah.
We don't have as good a credit.
We don't have savings.
We have higher debts.
Yeah.
And so all these things make it extremely impossible to get a USDA loan. And then we can only shop here, this little bitty area. And so now you're just shopping instead of all of San Antonio, you're shopping this little area. You got to find a house that qualifies for it. You got to hope that your people qualify for it. I haven't had one. I haven't. And you can take your client, and if you start hard selling USDA, they're going to get sold on this idea of 0 down,
right? And
whatnot, and you're going to turn your buyer into I guess a shopper, not a buyer.
Yeah.
They're going to just say, you know what, we'll wait until we qualify for USDA. I've had it happen.
Yeah.
And I'm like, you did this to yourself.
Yeah.
You should have said, you know what, I know about the loan types. I don't know what works best for you. Let me get you with an expert.
Well, going off of that, we were working with somebody that I mentioned.
USDA?
No, I mentioned down payment assistance.
DPA.
Your good friend,
yes.
Down payment assistance. You want to talk a little bit about that?
Yeah, I'll talk about down payment assistance. Down payment assistance is not a bad program.
Yeah.
It's good for the people that need it.
Yeah.
If I interview someone and they only have $3,000 saved up because they got a tax return, or they sold something, I can look at their finances and I can tell on a long enough timeline, there is no way this person will ever save the money to buy a house.
Right.
There's no way. Because they've maxed out their expenses. I see what you make. I see what's going out. You have $30 a month to save. Let's multiply that out and try to get you to $7,500. It's not going to happen, right?
Yeah.
So for those people, down payment assistance is a great program because now you can get into a home where you otherwise may not have ever been able to. But as a real estate agent, I think lightly touching on down payment assistance is like, hey, there might be some programs available. Let me get you with the lender. He'll talk to you about them. So we had a client, and they were dead set on getting qualified for down payment assistance, but the worst part about it is they had the means. They had the 401k and they had some down payment to buy a house right then.
Yeah.
And this is
that was when interest rates were low too.
Yeah.
It was like, oh,
it's been a little over a year now, maybe.
Yeah.
And I tried as hard as I could to tell them, look, so it's long story short, they wanted to do everything they could to get qualified for down payment assistance. Yeah. And so we had to get their scores up and do all this and keep trying. And it took months.
Oh yeah. It's 6 to 9 months maybe.
Right.
And then like we got them there, but then there was something funky at the end.
Well, I told them, look, prices are this right now. Rates are this right now. You have the means. Go buy your house. Go buy it. They were first time home buyers too.
Yeah.
Kind of later in life too. Maybe mid 40s. And I was trying to stress to them, don't try to get this free money because it's going to cost you. I promise you. By the time you qualify for it. So long story short, I called Tony and I'm like, hey,
they're ready.
They are qualified for down payment assistance.
But prices were higher.
Yeah, prices were higher.
Interest rates were higher.
Interest rates were higher.
They couldn't buy as much house. So now they're looking at a different quality of house.
Totally different. Yeah. The same house that they were looking at was now, I think, like $250 versus the $225.
Yeah.
Interest rates were higher. So now they didn't even qualify for a $225 house. They qualified for a $190 or $185 house.
Something like that. Yeah.
And then they were like, well, we'll pull out the money from the 401k. And I'm like, well, it doesn't matter. Rates are up.
Yeah.
You can't purchase the $250 house. And so those people still don't own a home.
Yeah. That was a life-changing experience for sure. It was a learning experience. I was like, man.
And so again, I don't think down payment assistance is terrible. I think it has its place. Usually when I talk to someone who has down payment saved up, who has 401k or has a gift coming, and then they ask me, oh, I want to hear about first-time homebuyer programs, which is all encompassed down payment assistance. I tell them, let me tell you what the differences are. This is what your rate is without it. This is what it is with it. This is why I think that you personally shouldn't use it. You have the means. And once I have an educated conversation with them, they make a decision. Let's move forward without it.
Right.
And so there is a place for it. I don't think it's a great idea for your business to explicitly market that. Are there programs available? Yes, there are. Is it the right program for you? I don't know. Let me get you with the lender. Lender will tell you.
Yeah.
And so I just have a conversation.
I think we all get a bad rep of like, I feel like when I mention like, let me get a lender in touch with you and all that, like people tend to get scared.
Sure.
Typically. And it's just like, look, he's going to tell you your possibilities, show you where you're at, where you need to be, where you want to be, what we have to do and formulate a game plan. So it's like, I'm encouraging you guys, like, reach out to us. Let's just start a conversation. I mean, we're not going to push you into buy a house right now. We're going to tell you that you might want to consider it, and tell you all the options.
Yeah.
But it's we're not pushy.
No.
It's just like, hey, these are your options. We want to make sure that we educate you, and you get to make the decision. Yeah. And so it's. Yeah. Just wanted to say that.
So DPA, it's there. It serves its purpose. Yeah. Don't dive into it with your client because you might open up a can of worms.
Then they get stuck with I want that.
Yeah,
and it's like, no, you missed out.
Yeah, they're fixated on getting free money, and it's not free. The interest rate difference, usually you pay it back in the first 2 years. If you look at the difference.
Yeah, that makes sense.
Which if you didn't have any money, that's great. Who cares? Right. I got my house.
Right.
But if you had the money, then don't do it because you're going to pay that money right back in interest. So anyway.
Yeah. It's a good point. Yeah. Sometimes I make the mistake of going, it's free. You don't have to pay it back.
It's not free.
It's not free. The interest rate's higher.
Yeah. Let me do the math for you. It's not free. After 2 years, it starts costing you some money, sometimes 18 months. Yeah. I do the math, but with someone who doesn't have any down payment saved up and can't get that down payment, it does not matter on the math.
Right.
Someone who has the savings, this is where I tell them, hey, sure, you're getting $9,000 or $10,000 or 12, but in 2 years you'll have paid that back, and every month going forward, you are paying for that free money. And so, we do actual math.
Yeah, math don't lie.
Yeah.
So talk to us a little bit about the market right now. It kind of, everybody's pumping the brakes a little bit. We have seen interest rates go up to like seven.
We tapped 7.
Then now they're about what? Mid
I would,
sixes, low
if I
sixes?
had to say what's an average rate, let's say 6.5 to like 6.75 or something like that.
Okay.
Too many variables. I mean, I got some people who are dipping into the 5s.
Yeah.
I got some people who are above 7. There's so many variables, credit, purchase price, down payment, all these things play factors.
Average 6.5 to 6.75.
Yeah, right in there.
Okay. Yeah. What do y'all predict? I know, it's just a prediction. We have no idea what's going to happen, but everybody thinks that they're going to start coming down, depending on who you're listening to.
Sure.
When do you think that's going to happen? What does the rest of 2023 look like in your opinion? So
based on previous like Fed meetings, the general consensus, I'd say at least in my office, is that rates will continue to rise up until third quarter. And this is from people who are way smarter than me about mortgage. I lean on them and their infinite like knowledge, like the last 20 years.
Experience.
Yeah. And so I reach out all the time. Our CFO, that's all he does is, live interest rates. And so consensus is that we'll continue to see increases into the third quarter. And then towards the third quarter, I wouldn't say like, oh, it's going to start dropping. We just want consistency. That's all we want. If rates get up to, let's say something crazy, 9%, but they stayed at 9% for 3 or 4 months, that is good news because now we have a stable market. Yeah. And so we're looking for stability in the third quarter, where rates will kind of go sideways at whatever they end up at. I think right now the like 7% is the number because we tapped 7 and then immediately we had a pullback. And so the market didn't really like that. But I heard someone else say, it's just as likely as we see 10% by the end of the year as we see 5%. Like the likelihood of either of those two things happening is just as good because if you watch rates like we do, which is daily, we see how fast they've moved and how fast they can move. I mean, sometimes there's been probably 4 instances where we've come in and lost half a point. Yesterday, your rate was 6% and now it's 6.5 overnight. Yeah. And so you have a couple of those occurrences. 9% is easy. We're so close. And so then now we've got banks kind of imploding. That is kind of a twist that I guess no one expected. I'm sure somebody expected it, but we didn't. Right? We weren't thinking like, oh, well, when the banks close and the FDIC has to step in, it's going to affect rates like this. That wasn't the only thing we knew is that the Fed was trying to fight inflation. Now you've thrown this other curveball in there. So that's what we expect. We expect come third quarter, maybe we start to get some stability. And then with that stability going into the first quarter of next year, maybe we start seeing interest rates come down as the Fed, tackles inflation and all that stuff starts to happen. So that's kind of what we see. So rates still going up.
Yeah, stability is good. And I think that's what we've experienced over the past, say, 9 months or so. Obviously they've climbed and they've kind of bounced around a little bit. But I think people now are going,
that's what it is.
6%, 6.5% is pretty much that's the new norm.
It's what it is. Let's just move on with life, buy a house, and we'll refinance later.
Right. Yeah. And the good thing about, these interest rates is like you are seeing prices of homes come down a little bit.
Oh, yeah.
They're not dropping like crazy. Everybody wants them to rock bottom. No. That's not going to happen in San Antonio.
It's not gonna happen.
It's just people are moving here like crazy.
Yeah.
But you are seeing a lot more good houses in that 250 price point, stuff below 300. I swear there was a time where I looked on the MLS and it was hard to find something under 3.
Yeah.
Because the interest rates were so low. Like everything was like 3 and up, no matter where you were at. It was like, what the hell's going on?
Yes. So, with the housing market, and I'm not in it as much as you guys, but my people are out there shopping and they're sending me addresses and whatnot. And so everyone's waiting for this like crash. And I don't think we're going to get a crash, especially in San Antonio. Like we have plenty of jobs. People are moving here, like you said. It's still cheap to live here. And so while we did see some prices of homes come down, they were only the homes that were priced outrageous,
too high,
and they missed the boat,
right?
Because realistically, it's probably closer to 10 months now, maybe a year. You could throw anything on the market, and you could list it at what you thought was high, and get $20,000-$30,000 more for it,
sure,
and it appraised. Or they were going to pay the difference anyway. It was a conventional loan; they didn't care. Yeah. And so, I've seen like some Zillow homes with reduction. I'm looking back at the dates, and it's like 8 months of reduction. And it's $80,000. Yeah. Well, their price isn't coming down. They were priced way higher than they should have been. Yeah. And now they're just catching up to where market value is. Right. And so the new stuff coming on is priced correctly. Right. And so I don't think prices, went down. I think we're just seeing a correction of what was priced crazy. Yeah.
Absolutely. Talk to us a little bit about, let's move this along a little bit, but how to get qualified, maybe a first-time home buyer, they're scared, they're overwhelmed, they're going, what's going on with rates? Seems just overwhelming. What are kind of the simple steps? What's a good rule of thumb also or equation? How much house can I afford? Sure. And I'm sure they can look it up online and it gives them a general idea, but.
So how to get qualified? I recommend you talk to a lender for sure. A lender's not going to be able to tell you much until you've filled out an application. An application is going to allow us to look at credit. It's going to allow us to look at income. It's going to allow us to look at debts and assets. Assets are how much money have you saved up? What does your 401k look like? With these numbers, we can tell you pretty accurately what you qualify for. And if you don't qualify, what you need to do to get qualified. So when I talk to people, they're always nervous about pulling credit. Yep. We don't want to pull our credit. It's going to hurt our credit. Yep. Remember, I sold cars back in 2000, right? So I think this is where it came from. Okay. So we used to tell people, don't go this is my price for the truck, but don't go down the street and have him pull your credit. Because if he pulls your credit, it's going to lower your score, and I can't guarantee that I can get you qualified for this truck.
It was a trick, isn't it? It's a trick. It was.
Yeah. And we used it all the time. Yeah. You can go shopping, go get their price, bring it back to me. I'll see if I can match it. But don't pull your credit. And we knew that the other dealership couldn't accurately quote them on payment if they didn't have credit in front of them. Mm-hmm. And so that's what people put up this wall. Don't pull my credit because you're going to drop my score. And I think it was caused by car salesmen.
That sounds about right. Let's blame them.
Car salesmen, furniture, furniture salesmen. Yeah. Because we used to do it. I did it. Does pulling your credit affect your score? Yes and no. Can it lower your score? Sure. 1-2 points, maybe. Oftentimes, when I get someone who's applied with multiple lenders, I'll ask them, hey, what was your score over there? And they'll tell me, it's a 682. And I'll pull credit, and it's a 682. And so I know that when I pull credit, and they've pulled credit before, it's unaffected. And oftentimes we see that credit is unaffected when we pull it. Now, if you're the first one to pull it, you don't know what the scores were, and you can't trust Credit Karma or anything like that. Those are always inflated. Yeah. So you don't know what their score was, but now that you have it, this is what it is, right? Yeah. Say your score does drop 5 points. It's not going to be enough to make a difference. It doesn't change anything for you. And if you want to get qualified, we need to know where your credit is, because if you don't qualify right now and you don't apply, in 6 months, you're still not going to qualify because you're not going to magically qualify. You need someone to tell you this is what you do to get qualified. So I have a conversation with them. I knock down that wall about, pulling your credit isn't a bad thing. Pulling it 20 times is a bad thing. Don't go do that. I'm not telling you not to go shopping either.
And I heard that if you do different ones, if you pull your credit at getting a mortgage and then you go look at a car, get it pulled, that tends to affect it.
Those things can affect it
because you're shopping around at different things.
Yes. And so a credit pull with a lender, a couple lenders, it's not going to affect you. It's not going to change anything in the home buying process. Yeah. And once I pull credit, that credit report is good for 120 days. Yeah. So it's locked in. And if you're purchasing a home and you're talking to me and you know that you want to go shopping this weekend, right? That 120 days is going to get us through where we need to be. And so, first thing is to fill out an application. Super simple, takes you 10 minutes. It's all the basic information you should already know. name, date of birth.
You don't even really need to like submit any paperwork to do that.
No,
really. I mean, these are your numbers.
Right.
Plug it in.
So you can apply. I can pull credit. I can see what income you've entered, and I can have a general idea before I say that you can go shopping. I'm going to request some documentation, but I can tell you based on what you've entered, more or less how you look.
Yeah.
I'm not going to give you a pre-qualification letter until I see some docs. But yeah, you have a really good idea. And then they're motivated like, hey, I think I can get you qualified for $300,000. And then they're like, oh, let me get you pay stubs. Yeah. Let me get you a bank statement. Now they're not wasting their time. Yeah. Because they feel like I'm not going to be qualified. I'm going to gather all those documents. I'm going to waste my time and I can't even buy a house.
Well, here's another thing that I want to point out. And maybe they're right about that. You know, they know that the credit's not great, all that. But until you know what it is, you don't know exactly what it is. So let's have that conversation and go, okay, you like this house that you saw in Zillow and it's $300,000?
Yeah.
Okay, well, you're here, you don't qualify right now, but this is what you need to do to get you there.
A roadmap.
Yeah, for sure.
And I can't give you that roadmap if you don't give me a little bit of information. I can, with certainty, tell you what it's going to take to get there.
Right.
And kind of tell you, you know, this is how long it's going to take you.
You could pay off this debt. You could pay off that debt. Don't worry about that debt. Focus here, focus there. I mean, these are the kind of conversations that we have had with clients.
Yeah.
And, you know, and it helps.
One of the worst things is I get a client that comes to me and they say, oh, I paid off some debts to increase my score. I did all this stuff.
Didn't do anything.
And it was even damaging. Yeah. I've had people pay half their car off. It doesn't do anything for you to pay half your car because your payment is still $450. If you give them an extra 10 grand, it's still $450. But that $10,000 we could have used as down payment. Now we're looking at down payment assistance, and your rate is a point higher. And so, while as consumers we don't know what to do to put ourselves in a better position to purchase a home, especially first-time home buyers. Yeah. They'll pay off credit cards and close them, and I'm like, oh, cool, you tanked your score. Yeah. They're like, what happened? I was a 680 just a month ago. Well, you closed your oldest line of credit, but I paid it off. Yeah, I know. And you closed it. Yeah. That's bad.
That's bad.
You just increased your debt to income ratio, your availability ratio.
Well, I just want to say, don't feel bad if you don't know these things.
Right.
Because I've learned this stuff over the past 4 years, and I'm still learning constantly. Yeah. I call these guys up and I'm like, what can I do with this? Could I do this with my equity? Could I do this? Like, there's so many things that I don't know and that we're constantly learning and evolving. So again, it really helps to just pick up the phone, have that conversation. What are my options? Yeah. I'm thinking about doing this.
Let's see
what we're doing.
Which I'll plug myself here. I don't like to plug myself, but because I just want I want everyone to get a home. I really do. That's if you don't get it with me, get it with somebody else. Yeah. I want to make sure, just as a person to person, but having a loan officer that can talk to people is a very important tool. Someone that can have a good conversation with your buyer about, you know, what are your goals for this home? What are your concerns? Let me tell you how I can help you with those things. And if you have someone that's like, oh yeah, just fill out an application and send it over and I'll get to work on it. Just make sure you send me 2 pay stubs, 2 bank statements. I'll send you my link. Or you've got a loan officer that don't even want to talk to them. Oh, just send them my link. When they fill it out, I'll check it out and I'll give them a call after that. No. I hate when one of my my partners sends my link. They're like, oh, I sent them my link. And I'm like, give me their phone number. Let me talk to these people. Let me make them feel all warm and fuzzy about and get excited about filling out an application. So that's my plug.
I love that because I mean, people buy from people.
People buy from people.
People buy from people. I mean, that's pretty simple. So yeah, the power of just hearing somebody on the phone and go like, hey, I'm here local. I'm your guy. I'm going to send you this stuff. Go ahead and fill it out. And then we'll take the next step. Yeah. You know, and it's
a big difference. So
yeah, for sure.
You know, I pull, I think I know for sure the most applications in my office, maybe in the region. Yeah. It's because everybody I talk to fills out the application. Yeah. Even the ones that come to me and they're like, oh, we don't want to apply now. We're not buying for a year. Oh, cool. Fill out an application now. Well, we're not buying for a year. Well, would you like for your score to be a 780 instead of a 620 in a year? Well, yeah. Well, how are you going to get there? Well, I don't know. I'm going to tell you. Yeah. And we're only going to pull credit once. I'm going to tell you what to do. And then in 6-8 months, a year, you'll have better credit score. You get better interest rate. So you apply now.
Yeah.
Oh, I didn't think about that. And if I can tell you what not to do to mess yourself up in a year, because I've had a lot of people like mess themselves up.
Yeah.
And so anyway, get you a loan officer that can talk to people.
Huh.
Yeah.
I like it. I like it a lot. This whole thing started, and this is kind of like our last little topic here. About a week ago, I was in your office meeting with somebody else, and we were talking about like, man, why don't people understand that right now is still a good time to buy? You know, they're so scared of the interest rates. Kind of talk to us about the difference between, you know, buying 12 months ago, 18 months ago. Interest rates were so low. I could buy so much house.
Yeah.
That's great. But I'm going to tell my story real quick, and then you can tell us your experience. I mean, I was literally telling people, for first-time buyers, whatever the asking price is, plan on paying 10% above just to compete. So you're taking a $400,000 house. Let's go ahead and tack on $440,000.
Yeah.
And we tended, when we were able to do that, I didn't do anything special. I just told them that that's what they needed to do.
Yeah.
And they were able to do it.
Yeah.
You know, they got the house, which was great. Everybody was happy. But now instead of paying $400,000 home, they're paying for $440,000 home.
Yeah.
And talk about, that's a lot of money over the, your interest rate is low, but you're paying $40,000 more.
But no one, they saw, 3.5%.
Yeah.
They're like, oh, my interest rate's so low.
And so it's like, talk to us a little bit about like comparing apples to oranges and kind of.
So, and even in that time, right? I'm sure everyone can remember the lines. There was lines to see a house, and you had a 15-minute window.
This is true.
There was lines.
And there's no overlapping appointments because of COVID and all that. And it's like, oh my goodness.
It was crazy. And if you had an FHA or a VA loan, you weren't getting the house.
Yeah.
I had 30 offers.
Cash conventional.
Yeah, 30 offers as an average, I think. I made so many pre-qualification letters.
Yeah.
And my FHA buyers were like, hey, we're just going to wait. Till I don't know what happens, but we're going to wait. And I'm like, I don't know what to tell you. Like, it's crazy. Yeah. Even if coming in $30,000-$40,000 over, they're like, oh yeah, we got the same offer, but it was better. And it was cash.
Right.
And they're like, oh, all right. Well, I'll hang up my dream. So let's say it started like right with whole COVID thing, right? Yeah. So 2 years ago, interest rates were super low, but the market was insane. Day one, houses were multiple offer situation. You couldn't get a VA or an FHA offer accepted, and you were paying over. But your interest rate was 3.5% or 3%, heck, 2.875 in some cases. And that's an awesome interest rate. And people are like, oh, well, if they hold the loan for 30 years, they're saving X amount of dollars and whatnot. I'm like, okay, but what was that person's like realistic situation, right? First time home buyers, I think let's say 5 to 7 years, they stay in there. Mm-hmm. If you take $40,000 and you divide it by the 5 to 7 years that they're staying in there, and you divide that out, they're actually paying whatever that number is. We could do math. Here, I'll do it real quick. Let's see what $30,000 over the course of 5 years, so 60 months. So $500 extra. Yeah, of course, I could have done that in my head. But $500 extra, right? A month that they paid. They're not paying in payments. They paid it in a full chunk. So you could take that $500 and say, what would my interest rate actually have been? Effective interest rate, paying an extra $500 a month. I bet you it's pretty close to 6%. You got 3%, but if my rate was actually 6%, and I didn't pay the extra $40,000, effectively it's the same. Yeah. And now you bought a house that they didn't do any repairs. They were like, oh no, the next guy's gonna
take it or leave it.
The next guy's giving us stuff, to get the house.
Yeah.
So fast forward to today, we got no lines. Prices have leveled off. Yeah. In fact, now I think you can have a buyer and say, hey, see that asking price? Mm-hmm. We can come in under. Yeah. We ain't offering over. How long's it been on the market? 90 days? Yeah, we're coming in way under, right? Yeah. And so now you can purchase a home and get seller concessions pretty consistently. I think right now I'm seeing an average of about $5,000.
Okay.
Depending on how long the house has been on the market.
That's $5,000 that you would typically pay out at the closing table on top of your down payment that the seller is taking care of now.
Yeah, they're literally paying it for you. And so there's less competition. Interest rates are higher. Yes, they are. But so when I talk to people about buying a house, and I stress to them, again, from person to person, look, I'd love to do your loan. I just want you to get a home. Because I'm telling you, think about it on a long enough timeline. Prices in San Antonio have never come down. Maybe there's been a year or something where it was like an anomaly and they did come down. But I remember when I was coming out of high school, it was like you could buy a house for $125,000, brand new.
My first house was like 141.
Yeah.
I should have held on to that damn shit.
You go find me.
I didn't know. That was before I was a realtor.
I've seen houses now that are 160 and they're literally just like a little house and maybe with like a ladder and a loft or something.
Dude, I was literally looking at that this morning.
Yeah.
I pulled up the entire map of San Antonio. I said 180 and under, 3-bed, 2-bath minimum. Oh my goodness. Yeah. I mean, most of it is like just junk.
Yeah.
Most of it.
And so I speak to them from an affordability standpoint. They're like, well, the interest rates are just so high. We want to wait. And I'm like, okay, let's talk about waiting. Let's really talk about it. Why do we want to wait? Well, because interest rates are high. I'm like, okay. So we want to wait for what? For rates to come down. Is that what you're telling me? Yeah, we want to wait. Okay, so where would you comfortably want to buy? Well, maybe when it gets down into the 5s. I'm like, okay, well, we think, let's say optimistically, we see 5s in a year. They're like, okay, yeah, we can wait a year. We'll sign another lease. Cool. Mm-hmm. The house you're looking at today for $250,000 in a year, if you take the average of 4%, I think is what San Antonio appreciates.
Oh, I'm pretty sure it's higher than that.
I'm being really conservative.
Very, very conservative.
Yeah, that's $10,000. Yeah. I'm like, okay. I'm like, so the house that you could buy today for $250,000 is going to cost $10,000 more. Yeah. Okay. Guess whose $10,000 that could have been? Yours. Could have been your equity. So you're losing money. You're losing $10,000 there. You're going to pay the extra $10,000. So you could actually call it 20, right? You didn't gain the $10,000 and now you're paying $10,000 more. Interest rate is going to be 5%. Then we go in and I do the math and I say, hey, look, at 5.5% versus today's rate of 6.5%, this is your payment difference. 6.5% only matters for the time you pay it. So if you buy today at 6.5%, $250,000, and rates do go down to 5.5%, guess what? You bought the house at the lower today's price, no competition. You got repairs, you got seller credits, and in a year and a half, 2 years, you just refinance.
Yep.
Who cares? Yep. You only paid. Now we can actually do math on the 14 months that you had the loan at 6.5%, and I can tell you it's only going to cost you $1,600 to buy this house today versus buying it in a year, which is going to cost you $10,000. And when we do that math with them, then they kind of have an epiphany, like, oh, no one ever explained it to me like that. I'm like, I know, but you see this big ugly number of 6.5%, and no, we want to wait because the market this and all this stuff. Now is actually, in my opinion, one of the best times to buy because prices will go up with certainty. You could almost, bet on that. I mean, BlackRock is buying up residential homes by the thousands. I think they bought a whole subdivision. And if that doesn't tell you anything, I mean, if the big guys are buying residential, you should be too. And so mainly that conversation, when I really, really stress it, is with the first-time home buyer, the younger couple, or someone purchasing in what I would like to call the affordable price point. $250, $260, heck, $280 still, right? Because eventually they will be priced out. San Antonio, in my opinion, will go the way of like Denver or San Francisco or Austin. Go to Austin right now and try to find an affordable house. Good luck. They will be priced out and purchasing will no longer be an option. And so I asked them, do you ever want to own a home? And they say, yes. Now is the time. Because if you wait a year and you can't afford it in a year, and if you wait another year after that, it's just going to get worse. And unless you expect to start making $20, $30, $40,000 more a year on salary, you know, you're graduating or something. But if you're not, and this is your career path, and we can expect normal raises of 3 to 5%, likely you'll be priced out of a home and never own a home. And so I stress it to them, please, I'm not trying to sell you a home. I'm not trying to get a loan out. I don't want you to look back in a year and think, man, we should have bought that house. Because now we can't even afford it. And you're stuck renting. And that, to me, is one of the worst things I can think of, is that because someone wasn't, and it's all because they've just watched CNN or Facebook, or mom and dad and cousins, and everyone's like, oh, prices and the market's going to crash and interest rates are high. Don't buy a home right now. It's the worst time. It is. If you talk to an industry professional, if you ask me, it's right now is the best time to buy a home. Prices are where they should be. Mm-hmm. Interest rates are a little high. Sure, you're getting help on the entry level, right? You're getting seller concessions. You're getting stuff fixed. If you wait a year, you may be priced out of a home, or you're looking at a home that now you don't like. It's not an area,
or you have to change a location. Yeah, I really wanted to be over here, but I'm priced out of that area.
I don't afford it anymore. I can't afford it anymore. Yeah. And that's one of the worst things. And if you don't like the home, right, it's going to be worth $10,000, $15,000, $20,000 more. Sell it and make some money. Like, I didn't like it. Yeah. You know?
Yeah. Buy it now. And then, like, in 2 years, you go, hey, that's my first rental property. I'm moving on to the next.
Start your rental portfolio.
Yeah.
Sell that one and take the cash that you made and put a down payment on the one you actually want. Maybe you got a raise or something.
Right.
But if you don't start now, my fear is that they'll be priced out of the market. And I really believe that.
No, I think you're right. And again, it goes back to it. We're not trying to just sell you on this. Like, we're just trying to be honest with you.
Yeah.
I mean, the house that I'm living in right now, we moved in last July. I would be priced out of this neighborhood.
Already.
Like, right. Already.
Yeah.
Already. You know, I bought it and it was just under 350. And yeah, I mean, they're in the mid fours now. And like, I wouldn't qualify for that. And I'm like, man, I'm so happy I got in.
Would you want to pay that for it now?
Yeah.
That's what I'm saying.
Well, and exactly, you know, so it's like, that's happening
under
all
a year?
Across under a year. Oh yeah. I mean, I could sell this right now for about 400.
That's so crazy.
And it's like, be walking away with a decent change. I mean, what are we at? July to March?
Yeah.
7 months?
That could be you.
8 months, whatever it is.
If you pull the trigger.
Yeah.
And so I have.
What's going to be crazy is when it does dip.
When rates come down,
these prices are going to skyrocket again.
Oh, everyone that
exponentially.
Everyone that didn't talk to me or Tony and sat on the sideline and said, we want to wait and see what
prices are going to go up.
When rates, we want to wait till rates come down. Cool. You and everyone else are going to jump right back into the market, and guess what sellers are going to do? Oh yeah, I got multiple offers. I'm not giving you any discounts. You're paying for title. You're paying for everything. Mm-hmm. I'm not repairing anything. In fact, this guy offered me $5,000 over, and that's how it starts. 5, 7, 10, and you're like, crap, we should have bought that house.
Yeah.
And that I forgot to mention. That when rates do come down, our market's going to go crazy again because it's still affordable.
Yep.
And you're going to be competing with investors from California. You're going to be competing with all the people that have been waiting. And so, yeah, just do it now. Low competition.
Lock in the price, because once you lock in the price, you can change the interest rate.
You can change the interest rate.
You can't change the price of the house.
Yeah, the price will never come back down. You can't refinance the price.
Yeah.
Yeah, you can't come back and be like, hey, I want that price you were offering last year. No.
Right.
So, yeah, lock in the price, refinance later. It's that simple.
Love it, man. This has been a long one. I might break this up into 2 parts, but it's been awesome. I so much great information. I really enjoyed listening to your stories, to all the information that you provided. Tons and tons of value. How can people get a hold of you if they have questions about home loans and the process?
Yeah, so I'm available all the time on my personal cell phone. You can call me 210-834-6166. That's my personal cell phone. Call me, text me, however you want to get a hold of me there. They can find me at thrivemortgage.com. I believe it's the website. You can just search for me there. Instagram, _Shreddy. It's just like SHREDDIE. I used to be in really good shape. When I did a bodybuilding competition, that is kind of stuck around.
Is it cool if I put your tags in the show notes?
Yeah.
Okay, I'll do that.
Facebook Messenger. I don't use Facebook as much. I'm on there. But the best way is my cell phone. Just call me. Yeah. Don't be afraid to call me anytime. Call me, text me, whatever works best for you. Always available.
Dude, that was awesome. I loved it. I definitely picked up some things. Really enjoyed the show. I hope you guys enjoyed the show. If you did, share it with a friend, share it with a family member, somebody that's renting right now, maybe a first-time home buyer, somebody that's maybe looking to make a move, maybe buy an investment property, pull some equity out. We do all kinds of things like that. So share the show with anybody and everybody that you know. Leave us a review, give us a rating. That really helps grow the show. You could also join us on our private Facebook group, The Productive Agents, and you can follow us on Instagram, TikTok, and YouTube. We thank you for joining us today. Now let's get out there and go produce.